Good morning. We are on Monday, December 14th. It is Talent Talk. I am Jurgen, and with me today, we also have yo boy, Steve Chung.
Woo!
Happy Monday. And along with us also, Steve, you get to be the pickle in the middle because the other side of the sandwich is Davina Clarity.
Woo, I was way up there. Woo! Good morning. Happy Monday.
Yeah.
Happy Monday.
Good to see you guys.
Yeah, December 14th. The month is rolling along. 2020 is almost at an end, if you can believe that.
Wow. Yeah, what is it? 17 days left to the end? 16 days?
Well, you might be careful how you say that until the end. It's we might want to clarify that this year.
Don't you know coronavirus is going to end on December 31st, right? Like January.
Midnight. It's amazing.
It'll, yeah, right. Steve, where are your glasses? See, Jurgen and I have the glasses. You're missing the glasses. You're going to have to put on some courtesy.
No, only the pieces of bread wear glasses. The pickle in the middle gets to be all
right. Jurgen's got
that.
You've got your earpiece on, Jurgen, so you're going to be.
Just in case I need to take a call while we're talking.
Right. I feel like, Sesame Street, it's like one of these things is not like the other. Like now it's time.
Steve, you raised your hand on that. I feel like I raise my hand in every room I'm in.
Oh gosh. Anyway. Gosh, well, we actually are having a really good conversation today about a topic called forbearance. And we haven't really heard a lot about it. Forbearance has been around for many, many years, but now since COVID and some financial strains, and specifically in the mortgage industry, we've been hearing that term a lot more being floating around. And so we're going to talk about forbearance today.
Yeah.
And
and we heard a lot about it at the beginning of the pandemic, when there were a lot of restrictions that were coming down. We've heard less of it, but as we're forecasting into 2021, understanding where the housing market is going, it's at least a part of the conversation because this is kind of setting the stage as we launch in. So this is a great conversation piece or point just to talk about what's happening.
Absolutely.
At the very least, people will know what a forbearance is, right?
So let's kind of dive into this. We got a guest coming on here to help us talk about forbearance. But before we bring and introduce our guest on, we always have a trivia question, which leads us into our conversation. So trivia question for today is how many homeowners were in forbearance process as of September 2020? Was it 500,000? Was it 957,000? Was it 1.7 million or was it 3.5 million?
Yeah.
Drop your answer in the comment section.
And as a qualifier for that, we might actually need to, based on the beginning of the day conversation, before we even hopped online, qualify it as a mortgage forbearance, right?
Mm-hmm.
Yes.
There's so many different types of, we're learning as we go. This is great. So I'm going to go ahead and bring our guest on today. And we've actually had him on before. He's been in the mortgage industry for many years. He's one of our friends and one of the people that we lean on pretty heavily when we're dealing with mortgages. So we're very confident to have him on to talk about this subject because this company also does service loans, which is really important. He also has been not just in dealing with mortgages, but he also has done investments and also has been very involved in. I'm looking for the word here. I'm trying to give him a really good introduction, but he's really been on the back end of even helping people with their personal finances, as it's where he started. So he is really a well-rounded guy. He earns his stripes, and also give him a shout out for our veterans because he really does support our military in financing as well. He leads a team with Fairway Mortgage, and so without further ado, we are bringing on our guy today, Scott Collins.
And normally we have at this point a little, but we don't. Oh, we do. It just popped up. There we go. We did not, but we do. Hello, Scott.
Morning. Thanks. You got my skinny picture still. That's
Yeah, Scott, I'm so sorry, because I don't write things down. I just kind of go from the top of my head, and you were, before you got into mortgage, because I always, when I'm talking to people, I always say, hey, he also has, what were you doing before the mortgage thing?
insurance and financial planning.
See, that was the word I was looking for, financial planning. So anyway, all right.
And before that, in his head, he was an all-star baseball player, and
Exactly.
won the Masters golf after that. So it's an amazing storied career.
He actually did make a trip outer space as well, but that's a whole nother story.
Yes. No, that one's still on my bucket list.
All right. Well, thank you so much for joining us. And
Thanks for having me.
Yeah, appreciate your time. So as we're talking about the forbearance, and we're I don't want to say it's the F word, because it could be a bad word that we talk about, like in, when we're talking about financing and mortgages and all that stuff. But can you enlighten us, like, what is a forbearance?
Yeah, forbearance is not a bad thing. I mean, it's a tool for people who need it, but basically it's just an agreement between a lender or a debt provider and a client that says that they're going to help them avoid default or negative impacts to their credit by either suspending their payment, reducing their payment, just working out some sort of program to help them out. In the case of COVID, it's more of that the idea of it has come more from the government to kind of streamline the process and make it a little bit easier in terms of what people have to go through to get into the forbearance versus maybe what they've had to do previously.
Talking to you ahead of time, this will lead into a question afterwards about there's some different maybe myths or other things, misunderstandings about forbearance. But first, before we talk about that, forbearance at the beginning of the pandemic was much more prevalent conversation. As we've kind of gone through, there have been other things that have come to the forefront of the conversations. But as we wrap into from 2020 into 2021, and we look at forbearance, is forbearance still something that homeowners are needing to consider or have been considering? And if they are considering it, what is the process of somebody utilizing forbearance?
Yeah, I mean, it's definitely something that if people need to use it, it's definitely still available. It just the deadline for entering into it just got extended to the end of this year, which with a 6-month forbearance with up to an additional 6-month extension means that some people could be in the forbearance program through the end of 2021. So, obviously it's not a free ride. It has to be paid back in one of a number of different ways. But no, it's definitely a tool that's still available for people that need it. And in terms of qualifying for it, in the past, you really had to show, with your lender, a real need for the forbearance. They've kind of, reduced what it takes to to prove that now with COVID. And basically, if you talk to your servicer and just tell them you're having trouble making your payments, then they're probably going to work with you.
Okay. So Scott, in talking about forbearance, how would someone qualify for forbearance?
Yeah, I mean, like I said, they don't really have to qualify. There's no real big test they have to take or anything. It's basically just if they're having trouble, if they lost a job or had reduction in hours, anything like that, and they just talk to their servicer and tell them they're having trouble making their payments due to COVID, then they're pretty much going to be eligible.
So you're as you were talking about, it does have to be paid back, and even beforehand, Jordan had mentioned that there were some myths about COVID. There's some myths about COVID too. But anyway, there's some myths about the forbearance process. Can you talk about some of those things that are floating around that people are maybe getting wrong, or what are some of the things that we should know that really are truths, and what are some of the myths?
Sure. Yeah, and just to go real quickly back to what Steve was saying, that in terms of a lot of times people aren't even having to make those calls. I mean, a lot of lenders are very proactive right now. I mean, they're calling people, when their mortgage payments aren't even late, or lenders are just calling and offering forbearance and talking to people in their servicing portfolios about it. So, like I said, it's not a hard thing to do. We're also seeing it on auto loans and student loans and other types of debts as well. But in terms of the misconceptions, I would say, one of the big ones is that it's a bad thing for people, and I think that's kind of a myth. If somebody really needs to take advantage of it, then it's it's a good thing. It's better than going into default or going into foreclosure, getting behind on payments in a way that's you can't get out of in the same way that you can get out of forbearance. So not just stopping to make your mortgage payments, you need to call your servicer and talk to them about that and get into a forbearance program, so that it doesn't really drastically negatively affect your credit and your ability to do things going forward. So that's probably a big one. It's definitely better than being foreclosed on or going into default or things like that. But you will still owe the money. So that's another one. Some people, I think, do think that it's just kind of a free ride, and that they're, in fact, early on, some of the servicers were calling people and, basically just telling them, hey, it's a free loan for 6 months, or, you can skip your mortgage payments, and not really doing a great job of explaining it in some cases. But it definitely does have to be paid back. And, depending on how that's done, can also affect somebody's ability to take advantage of the really good, interest rates right now if they want to refinance. So that's one of the things that also was not really well explained to people early on, was that, you are going to have to pay it back, and it might impact your ability to refinance and take advantage of what's going on, in terms of interest rates and home equity and things like that.
Nice. I do have before the next question, a follow up on that one, because you mentioned the inability to refinance and the option for foreclosure. What about credit? Does it really impact credit if you're in a forbearance?
If somebody was current on their student loan, mortgage, whatever it is that's going into forbearance prior to that, then it shouldn't. Forbearance is supposed to, basically suspend that where it was at, so it's not going to not going to show that negatively. So that's why somebody could miss up to 6 to 12 mortgage payments in a forbearance program, and they're not going to have that reflected on their on their credit report.
Okay.
So, Mr. Scott Collins from Fairway Independent Mortgage Corporation, are you having fun?
Sure.
He's not
every day.
You use the term drastically negatively impacting something. And at the beginning of the year, when forbearance was mentioned, it really felt like what was going to happen here was going to be Armageddon, doomsday, or what was happening in real estate. It hasn't necessarily, it like so many things at the beginning, it has been a little less than predicted. But when we do think about forbearance, the big concern was that forbearance was going to lead to a big influx of foreclosures, right? It hasn't. But what do you see the impact of the forbearances that really have been a little bit more negative, drastically negative? Like, what is the impact on foreclosures or any other lingering effects?
Well, at this point, I mean, the impact on foreclosures is that it's pushed that off, stopped it. Like I said, with the forbearance and the the protection against foreclosure, having a not reporting late, not going into a default. I mean, normally creditors are calling after about 90 days, typically, to start that foreclosure process. And obviously, with not having that reporting late and not in the same process, then that's being pushed out, in some cases 6 to 12 months. So it's definitely helping people in that process of not being foreclosed on. And I think at this point, I mean, in terms of the number of homes that are in forbearance, I've seen numbers anywhere from 25 to a quarter to a third of mortgages that are in forbearance haven't missed a mortgage payment. So they're in the forbearance program, but they're actually current on their mortgages. So just because someone is in forbearance doesn't necessarily mean that they've missed payments.
Yeah, that's really interesting. But it's actually been a good thing in terms of a Band-Aid or a bridge to getting healthy again.
Yep.
Sounds like a safety net more of anything. If that's the case, if you're in it and you're paying, if you can't pay, then you're protected. It sounds like that's kind of a safety net. So,
I always, thinking of forbearance, I always go back to like maybe about a decade ago when we were coming out of the that downturn in the market, and the market started shifting, and the market actually started taking an uptick. There were still people who were still behind on mortgages. I remember a lot of mortgage companies actually working with people, giving them forbearance, and it was always a good thing because they were able to get out of foreclosure by using forbearance. So it was always a tool and an option for people who were looking at foreclosure to be able to save their home, their credit. It just seemed always to be like a good tool to have to use. So. But when thinking about that, Scott, what impact do you see forbearance is having on like long-term mortgage servicers if they aren't collecting the payments?
Well, the Fed and Treasury have done some, to help out with that. Initially on, that was the big concern, and not a lot of people really understand the mortgage owner servicer relationship, but. Yeah, it was definitely a concern early on, and basically, kind of the way, to use a real estate analogy, the way that it works is that, that the person who services your loan may not be the actual owner or the investor that owns the mortgage, and so that's kind of one of those misconceptions too, just about the mortgage industry. It's kind of like a landlord. So the landlord owns the house, but you've got a property management company that's actually doing the property management. And so the concern is that if you had a bunch of tenants, homeowners who stopped paying their mortgage or stopped paying their rent to the property management company, that property management company still had to forward those payments on to the homeowners without any revenue coming in. So that's where they were really worried about liquidity and having money to help the servicers get through. But through some of the stimulus packages and things like that, they've stepped in to help out with that until people can start making their payments again or come out of forbearance and choose one of the options to bring their mortgages current.
okay. That's good to know. Penny is asking, what was your question? Stephen, you restate your question. It sounds like we're, interrogation.
Good morning, Penny. So the question on
the last question that you asked Scott.
So it was what impact do you see forbearances having on long-term mortgage services if they aren't collecting the payments?
Yeah, so like I said, the government has helped out in some respects there to bridge that gap of liquidity until people start to make their payments again. Whether that's repaying a lump sum, paying it back over the short period, or having it added on to their mortgage. But in some respects, we may not know for another year until the forbearance periods end, and at that point, if they don't extend them, and if people still are out of jobs and at that point still can't make their mortgage payments, then we're gonna have to see what servicers do. But so that is potentially out there still.
Is it my turn? Are we round robin? And look, that was great. The last question, and Steve, we got a whole nother answer, a whole addition. So thank you for that. So I know one of the things that the COVID has just kind of changed our world. When we look at all industries really. And I don't know, Jurgen, I know we were talking a little bit more beforehand on before we go into that. I know, Jurgen, we actually have a slide that you wanted to share in regards to kind of what had originally in regards to the numbers of people that had gone into the forbearance process and the number of people that have gone out, and kind of like the perception of we're kind of going downhill, and it really hasn't happened that way. We know that there are a lot of families that are impacted. A lot of those numbers are tied to, even Scott, as you mentioned, people are in forbearance, but they're not really in financial hardship. And some companies actually automatically put their clients into forbearance and they didn't even know it. So that's contributing to some of these numbers as well. So I don't know, Jurgen, I know that we had talked about that. Did you want to mention any more in regards to kind of what we're seeing and how we were perceiving in the beginning versus now?
No, I am having a forbearance of thought, so I'm putting off all thought for the time being. Up to a year, no. Yeah, I mean, this is what we were talking about, and Scott, this is feels very representative of what your perception of it has been as well, which is a lot of activity at the beginning with forbearance, but as they've been within the plan, the servicers really have been working with the borrowers as well. 54.6% are actually paid in full as we and some of that is with their loans being paid off or making arrangements to be there. 30.7 are actually in a repayment plan of some type. And of all the ones that have gone through, when you look at the numbers, it's still relatively high in a number category, but as a percentage, 14.7% are still in trouble. So relatively a small percentage of all those who were in forbearance are we seeing some kind of a lingering effect. And then, Scott, as you were saying, that is something that we'll be keeping an eye on because we're not sure how that's going to play as we move into 2021, as we get past the second extension of a forbearance. As a matter of fact, aren't we really close to seeing at the beginning of the year or into the second quarter, really the first round of people that are going to be through a full year in the forbearance program?
Yeah, probably. And so those, like I said, those people may be able to, to talk to their servicer and get that extended. It's not necessarily part of, the official program, but I'm going to guess that there's probably still going to be some options, and servicers are going to continue to work with people because, they don't necessarily want to go through that foreclosure process. But yeah, so I mean, they can get back current by either paying back the lump sum of what they owe. They can take what they owe and divide it over a number of payments to pay it back, or they can do the modification process and basically just add it on as either a non-interest kind of almost like a balloon payment that's not accruing interest, and it would have to be paid off if they refinanced or sold their house, or they can do the full modification where just they restructure and then add it to the loan and maybe extend years and things like that. But yeah, there's a number of options that servicers have that they can walk people through.
Yeah. And Davina?
Yeah, I feel like I'm doing a lot of talking on this. Okay, so as we're back through, and then just talking about just in general, like what changes have you seen, overall in the mortgage industry? I mean, there definitely are some myths just even about the finance processes, where interest rates are low. People are saying that we're in a bubble. Just in general, can you, because since we're talking mortgages and we know how the market is, we've been talking about it, what are some of the changes that you've seen now? The last time we had you on, it's been months, and now fast forward, we were getting close. That's crazy. We've been in 9 months, 10 months. We're getting close to a year. We're close to
almost, yeah,
in this season. overall, what have you seen in the mortgage industry in regards to changes and that you can share a little bit about some some secrets?
Yeah, well, I mean, directly to do with COVID and the forbearance stuff. But one of the things we see a lot is we see other accounts that are in forbearance too, like student loans, auto loans, installment loans, things like that. And a lot of those people are getting put into just automatically without even knowing in a lot of cases. And so some of those can cause hiccups, when they're trying to refinance. A lot of times people, whether they've talked to a servicer or not, they don't know that they're in forbearance on their mortgage. And then they try to do a refinance, and they can run into some hiccups there. Usually they're not huge things. We can work through them, but depending on what kind of loan they have, VA, FHA, conventional, there's different guidelines that they have to meet, in order to be able to do their refinances or to purchase another home. But outside of that, I would just say that it's really pushed a lot of people into the digital age a lot faster than some of them might have been ready to go. I mean, online applications, apps, not being able to meet with people in person, if at all, to the same extent that we did, in the past. One of the great ones is, I know for 2021, one of our company's goals is to get a majority of our actual signings with escrow to be remote e-signings. So all the documents that don't need to be notarized could be signed electronically. You could have, co-borrowers in different locations, at work or at home, signing the same documents at the same time electronically, which is great.
Yeah, Davina said something about a bubble. Made me think about mime in a box. Like,
I would have thought you would have gone Bubble Boy.
John Travolta, right? The boy in the bubble. So as we're, thank you for the time again. And then Steve, you'll probably have the last question here, but you just started to mention about some goals of 2021 of what you can do from the processing standpoint, like with the e-signatures, the other things. But out of curiosity, with this year wrapping up, and COVID is now, like David had mentioned, it's been nearly a full year that we've been working through all of these processes. We figured there'd be some level of a disruption in housing or in real estate, but that really wasn't the case. We've seen real estate be very strong after a hesitation. When you look on, and mortgage is certainly riding in that coattails, in addition to all the low rates and the refis, as you guys are, as you're like forecasting, projecting into 2021, what do you see for the mortgage industry as maybe not the processes, but as from maybe rates, as to speed, etc. What do you see for mortgages coming up in 2021?
I mean, I think rates are going to stay relatively low for a while. I don't think the Fed's going to be doing much in 2021 to raise rates. We've all been pretty busy, so haven't had a ton of time to to look forward. But from everything that I'm seeing and reading and hearing, is most expectations is in terms of mortgages that 2021 is going to be one of the largest origination years, especially for purchase business, is what they're projecting in a long time.
Okay.
So you're bullish.
From what I'm reading, yes.
Yeah, and I did say bullish. So
bullish, yes.
It's a thumbs up for 2021, not a thumbs down. I think we're hearing a lot of thumbs up for 2021.
Yeah.
I think everyone's expecting a big year. I mean, just the way all the indicators and with that way everything's pointed right now,
Mm-hmm.
I think we're looking forward to it.
Mm-hmm.
Yeah, I mean, I think obviously we went through a lot last year or this year, and so whether it's not hopefully it not being as bad as last year, and then with the stuff that people have had to come up with to figure out ways to get through what we've gone through, I think people have more systems in place to handle it, and hopefully it's a better year just in general.
Yeah. Yes. So, as we wrap here, any final thoughts, maybe advice that you give, maybe in regards to forbearance, or what maybe borrowers, buyers can expect or look forward to?
No, I would just say if, like, again, if people need it, they need to reach out to their servicers. Don't just stop making payments. Contact whoever has your auto loan, your student loan, your mortgage, whatever it is. Contact them and get in the program if you need it, so that it's done the right way and they don't report you late. You don't have any of those lingering effects from not making payments, and you're eligible for it.
All right. And Scott, if someone was looking at maybe financing options, or had some questions regarding forbearance, how do they get a hold of you?
They can call me 360-918-4800, or they can go to my website and get my contact information, collinsloanteam.com, or they can come to Starbucks in DuPont and wander around the parking lot and find me.
You just hang out in
one.
Yeah, we're right there in the Starbucks parking lot.
Oh, okay. I was literally thinking you are going to be just in the parking lot.
I can be if needed.
Yeah, don't forget there are actually 2 Starbucks in DuPont, so
that's true. Yeah, and you can't designate it by the drive-through anymore because they're both drive-throughs now.
Yes.
Yep. I'm going to ask, before we go, I'm going to ask you a quick question, because I was thinking about this when we talked about changes since COVID, and I just want to say, Scott is an avid softball player, and we totally missed this year's Realtor tournament, and we also have a spring league that we normally do, and we missed Scott, and we're always asking Scott to come because he's one of the best players. There's a couple of people and Scott's one of them. We're like, Scott, can you play on our team because we need you? Yeah. And last year you were playing softball, and didn't you break something or twist something or do something?
That was basketball. I tore my ACL playing basketball. So this summer might not have worked for softball anyway, but next year.
So this has been a recovery year for you. So this is not a bad thing. So, and I know several people that have broken and twisted and pulled things, like Donna. Did I say Donna? And so 2020 has been like a year of recovery physically for a lot of people. So we're looking forward to 2021 so that we can get back to the activities and the physical stuff, right? So
indeed.
All good. Anyway, Jurgen, you're looking, because I'm all over the place here, but Jurgen's frowning up. But we're looking for this. We're last talent talk, or a couple talent talks ago. Jurgen's going to be we're going to be running the bill, which is a running thing. So it's all about 2021 and activity this next year. So looking forward to that. So I just wanted to throw that out there. Random thought. But
we'll try to be ready for softball this year.
You're gonna have to be. It's just the fact of being able to get together and do something where we can actually be active together. That is going to be so much fun.
Mm-hmm. Yeah. So totally. All right. So we have our trivia question.
We do. We got our trivia question, and Scott, since you're on here, you can give us the answer.
Well, what were the options again?
So, how many
no options.
I would have to go with the 3.5.
3.5. So we got 500,000, 957,000, 1.7, and 3.5 million. And the answer is, ding, 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 Scott, you are correct. 3.5 million homeowners.
Yeah. Now I'd like a more exact answer, though. 3.5 is pretty round. That's
3.498.
All right. Well,
thank you,
Scott, for
you bet
for hanging out. We appreciate you.
You bet. Have a good week.
Yeah.
All right. You too. See you.
See you later.
Thanks, Scott.
All right. And Christy had flashed up real quick during that time, and I missed as I was looking down for a moment. But hey, Donna, I saw you were in the comments too. Hi. There we go.
Good morning, Donna.
What's up?
Good morning. Good morning. All right. So, oh.
Getting more or answer never disclosed about this and is now preventing me from getting a mortgage because of missed payments. The lender still reports the missed payments even if we agree to put it off or move it to the back of the loan. So does it maybe help or now or hurts you later?
So it may help now but hurts later. So
Scott,
I guess
you're still on.
Yeah, I think it kind of depends on, it sounds like from Scott, depends on your learner. You know what, Christine, I would just get some advice. You know, if you have, obviously your mortgage servicer, obviously your mortgage, oh, there we go. There you go, Scott's still here. Did you see the question? Can you talk on that, Scott?
I did. Yes, so they're not supposed to report it late, but they will still report that they have not made those payments. So that's part of kind of what I was talking about, the refinancing issues that people are running into sometimes. Typically, if they had made the required number of payments prior to going into the forbearance, then depending on the loan type that they have, there may be some wait periods. Conventional and FHA, and in most cases, or they have to make three on-time monthly payments after coming out of the program. VA, as soon as it's brought current, then they can do that. But with FHA and conventional, typically it's going to be it either has to be reinstated, which would be paying everything back in full, or selling the house and bringing it current that way, or they have to once they've come out of the agreement, they have to make 3 on-time monthly payments before they're eligible. So they should talk to a lender about what it takes to get to be eligible again. But my understanding is that although they may not report the actual payments, that they're not supposed to report late.
Yeah,
that's assuming if you are reaching out to your service provider ahead of time in talking about forbearance, correct, Scott? Or
correct, yes. So assuming that you got into the forbearance program without being late prior to to that, yes, if there were late payments beforehand, then those are still going to report.
Yeah, but if you did miss payments and you're 6 months behind, you could still enter into forbearance, but at that point it's already a little bit late because it's already been reported.
Correct. Those late payments prior to going into the forbearance program are already reported.
Yeah. Okay.
Thanks. Yeah, thank you.
Yep. Bye again.
All right.
Bye again.
Okay. Well, good. If there are any other questions, feel free to pop those in. Beyond that, Steve, you got a couple updates before we do a wrap, right? Oh.
Mine says otherwise. I picked the 3.5.
You know what? Anybody listening would have heard.
Yeah.
Chris, could you put that up again just so we can read it out? Okay, I just had my eyes, opened my eyes when I made my choice, LOL. Otherwise, I would have picked 3.5, LOL. Oh.
How much of your question? Yeah.
I thought it was to do with something else, so I was like, what? Huh?
All
Okay.
good.
All right, you guys. So, hey, before we wrap up, we just got some real estate news and updates coming for you, coming at you. So right now, we have we normally do work with Salvation Army, and we're out there and we're ringing the bell and trying to raise money for the Salvation Army. We can't do that this year because of COVID-19. So we do actually have a virtual kettlebell. If you go to our John L. Scott Facebook page, you could click on the link and you could help donate and raise money for our red kettlebell for the Salvation Army. So check that out. Please come by, drop a donation in our virtual bell. That would be awesome. Also, this week, for our John L. Scott brokers out there, we have our weekly office meeting this Wednesday at 9 a.m. We'll be having a guest in, Jim Remley, and he's going to be talking about real estate coaching. So make sure you tune into that. That's going to be some great stuff that we're bringing to you. We also have our Facebook Friday, where if you tune into our Facebook webpage, we bring you lots of really great information and a guest speaker in regards to certain aspect within the real estate industry where they can talk on it and kind of go over things that are going on and affecting us in our real estate industry. And then also on Friday at 8 a.m., we have our Friday market real estate update with Jurgen and Davina. So they will be in and they will talk about what's going on in our local real estate market here in Pierce, Thurston, King County. They'll also go over the new listings that we have coming on the market, and they will go over our right now virtual open houses that we have scheduled for the weekend. So we got lots of great stuff coming at you. Tune in as always. We always have some sort of item of value that we're always trying to drop, a little bit of knowledge that we're throwing your way. So
sounds wonderful. All right, now it's time.
It's time.
Let's say goodbye.
All right, it's time to be bold, right? So, and we're actually ending 8:56, so it's before 9 o'clock. We're wrapping this up. It has been, we started on time, and our goal actually is to do this in 30 minutes. I don't know how many times we've actually achieved that, but you know, it's all good. We definitely enjoyed having Scott on to talk a little bit more about forbearance. And I actually learned that forbearance shouldn't be scary. And it's actually a tool instead of maybe maybe not necessarily a bad thing, but something that can be used if needed. So it's all good.
Yeah. As long as it's good to know. Just wrapping on Davina's thought there and turn it over to you, Steve. Is as long as we understand what the tools that are out there are for, and we don't kind of get freaked out with the worst case scenarios, but understand that there's actually a good reason for having it available, and for those that utilize it in the right way, it could really help them through a very tough time in life, and that's really the what's good. And good to see you too, Penny.
Yes.
Well, I mean, kind of. Your comment.
Yeah.
That'd be weird. Have cameras there all over the place, like seeing everybody all the time.
Okay.
All right, you guys. Lots of great stuff coming this week. Tune in again next week, where we'll be back here again with another weekly edition of Talent Talk. Do we got a guest speaker scheduled for next week? I mean, I know we will, but
absolutely we do. Absolutely, yes, we do. to go back and look at Chris. Is Christy? Are you back there?
No, she's not.
We do have a guest. We do have a guest speaker that is scheduled for next week, and so tune in and you will see who they are.
All right, I like it as always. So, all right, you guys. Be bold on the count of 3. 1, 2, 3. Be bold.
Bye.
Have a great week.
Have a great